What's going on, everyone? Are you getting a little freaked out, little paranoid with the market going down, particularly newer investors or people with high yield funds? I want to talk to you about Mike's survival guide to withstanding pullbacks, corrections. This is Mike, tactical stock scalper. All right, all right. So let's talk about overall market conditions and what the real data says, right? So far, all it is and is a pullback, or it could possibly turn into a long overdue correction in the market. That's it. That's all price has shown us. And you're going to hear a lot of people talk with their feelings and their, predictions, right? You're going to hear all these morons out there with that. The only thing you need to look at is price action, period, point blank. Don't rely or listen to people with their feelings or prognostications when all of that is irrelevant. All you have to do is look at a chart, okay? We're in a pullback. Maybe it'll turn to a correction, long overdue in a raging bull market. Pull up a SPY chart, pull up a Dow Jones chart, pull up SPX, pull up Qs, pull up NASDAQ 100, pull up whatever you want to pull up, and zoom out and breathe. Okay? So that's the first tip in Mike's survival guide. Next, you're going to see folks come out the woodwork when the market starts dropping. All the naysayers. I'm not talking about high yield dividend naysayers because that's really stupid, but I'll get to that in just a second. But just overall market people on YouTube, Discord, Reddit. And they only come out or talk more when the market goes down. They'll say stuff like, I told you so. Everyone knew there would be pullbacks and corrections, right? These people think there's some kind of freaking Nostradamus. Of course pullbacks are going to happen and corrections are going to happen during a bull market because that's normal market cycle movement, right? But what they're trying to do is get you panicked, get you freaked out, and all you got to do is zoom out and look at a chart and breathe, honestly. That's all you really need to do. But every single pullback that we've had for the last 2 years, these people come out the woodwork with their YouTube videos or whatever, right? Or CNBC, that doesn't matter. They come out every single pullback the last 2 years talking about, this is it, I predicted it, this is it. You'll see even morons on Discord saying that stuff. I predicted it, told you this is going to happen. And they're wrong every single time because every single time for the last 2 years, every dip has been bought. We still got room to fall to form a correction. We're not even close to correction territory. That leads me to my next point. If your account is in trouble and you're having to sell shares at a loss to pay for margin, that should tell you something is really wrong on how you're managing your account. But I'm not here to tell anyone how to manage your account. It's your money. You do what you want with it. But if you like to lose money and that's something you're into, or you're a gambler or a degenerate or whatever, who cares, right? You don't care. You're just in it to try to get the big score. But for most people, we want to preserve, right? Preserve our accounts. So if you were really over leveraged during the bull run, that should have teach you a lesson, hopefully, that you shouldn't be so greedy. Because the market punishes the greedy and the fearful. You're seeing how it's punishing the greedy, right? With people that are over leveraged during a massive bull run and even just a small dip like we've had. Like I said, we're not even in correction territory yet, right? We're just 5-6% off the highs? Nothing. It's absolutely nothing. And if you're losing, we're all losing paper money because the market is going down, unless your cost basis is super low. But if you're selling shares for loss just to feed the margin, then it may be a really good time to evaluate your account. So that's how it punishes the greedy. It also punishes the fearful, those that are afraid to take risk and buy at dips on the underlying chart, and because they think it's going to continue to fall, because they speculate, they guess. Just wait till it hits a level. Looks like it may provide support. Maybe it will, maybe it won't. But if you buy at a level incrementally, that's how you survive a bear market or a correction. That's going to lead me to my next point. I personally, as the market was ripping up, anytime dividends were above my cost basis, which happened for months on end with many funds, I pulled those dividends 100% and put them in a high yield savings account. Why? Because everyone knew there was going to be a pullback or a correction at some point. You can't just run up infinitely. It's not the way the market works. And anytime shares got above my cost basis, sometimes I trim them, I make profits, and then when I make profits from trading, I put that in cash or build my free dividend position, right? A whole position built only out of profits, so I don't care what happens to it. I might rather it go up, but it's irrelevant, honestly, because everything that's coming from it is free. Okay? So I've prepared for this for months, and now I'm ready to deploy some of the cash that I've been saving for months, waiting for a moment like this. And if we go deeper, guys, I could buy the dip for a very long time, because I buy at levels on a chart using a percentage. I don't care if you have $100 in your bank or $1 million, anywhere in between. Doesn't matter. If you use a percentage, whatever that percent, 5, 10%, whatever, at each level, not just because it's red, you average down at levels on the underlying chart, you could theoretically buy the dip for years. Just saying. But if you blow your wad and, all on one dip and now you have nothing left, I don't know what to tell you. That's greed. Patience, discipline during a drawdown, during a pullback or correction. And then once you get your average cost lower, you have more shares, right? You're making more dividends when the eventual happens and the market goes back up. Here's how you play it. When a market's going up, you prepare for a pullback, correction, or crash. Okay? When a market's going down, you prepare for the eventual run back up. That's it. That's all you got to do. It's that simple. Hopefully this helps somebody out there. And this is just the way I play. This ain't financial advice. I'm not anyone to give financial advice. I've never went to college for anything like that or worked at a firm. I'm just me talking. This is my tactical stock scalper out.